morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Monday, October 3rd. Stocks around the world are picking up right where they left off last week, in negative territory. Friday's global sell-off capped a quarter that marked the worst three-month span for the Dow Industrials since the height of the financial crisis nearly 3 years ago. Concerns about the European sovereign debt crisis have been the key reason for those losses, and it's right back in the headlines today. Greece said it will not meet its goal of bringing its deficit down to 7.6% of GDP this year. The country's deficit is now estimated at 8.5% of GDP, while next year's may come down to 6.8%, which would also fall short of the target. Greece blamed the misses on a much deeper than expected recession, and according to the Wall Street Journal, the country has now agreed to implement another $8.8 billion in austerity measures. The measures are required for Greece to receive its next round of rescue funds. That money will be a major topic of discussion when Eurozone finance ministers meet today in Luxembourg.
That news out of Greece, combined with a second straight month of contraction in the Eurozone manufacturing sector, is pushing stocks across the continent sharply lower. The Asian markets also finished with steep losses overnight, after a report by Credit Suisse warning of rising debt defaults in China. Hong Kong's Hang Seng Index plunged nearly 4.5%, to levels it hasn't seen since 2009. With all this uncertainty in the global economy, investors are searching for relative safety, and that's helping gold rebound from a steep recent sell-off. Right now, the precious metal is back around $1,660 an ounce. Silver is gaining ground as well, topping the $31 an ounce mark. Long-term U.S. Treasuries, another traditional safe haven, are also rising, pushing the yield on the benchmark 10-year note below 1.9%. And the dollar is higher against most of its major rivals in the currency markets. But one asset that continues to get hit hard is crude oil. Right now, it's dropping another $2 to just above $77 a barrel.
The biggest corporate story of the day involves Yahoo and its status as a possible takeover target. Jack Ma, the chief executive of China's Alibaba Group, reportedly told an audience at Stanford University that he might be interested in buying the company. Yahoo currently owns a 40% stake in Alibaba, but Jack Ma has clashed with Yahoo's management for years. Now Yahoo is searching for a new CEO, since its board fired Carol Bartz nearly a month ago. The company may also get interest from private equity firms like Silver Lake Partners, and media executive Peter Chernin is rumored to be mulling an offer as well. Shares of Yahoo are jumping 3% on the news. Separately, Yahoo entered into a strategic alliance with ABC News, with the goal of reaching more than 100 million people in the United States on PCs, mobile devices, and tablets. Under the deal, ABC News will be integrated into Yahoo News and the search engine's front page, and the company's editorial teams will work together to co-produce coverage of major news events.
We have a couple deals in the solar power industry to tell you about. First Solar sold its interest in 2 projects in California. Exelon will buy Antelope Valley Solar Ranch 1, while affiliates of NextEra Energy and GE Energy Financial Services are buying the Desert Sunlight project. The terms of both deals are still under wraps. First Solar is dropping more than 2% on the news. Meanwhile, NRG Energy said it completed its acquisition of the California Valley Solar Ranch from SunPower. The companies will jointly operate and maintain the project for 2 years, and then NRG will take it over completely. And finally, we're keeping an eye on shares of Pharmaceutical Product Development. It agreed to an all-cash buyout offer from private equity firms the Carlyle Group and Hellman & Friedman. The firms will pay $3.9 billion for PPD, representing a 30% premium over its closing price on Friday. That's the latest from Weiss Research. Have a great trading day.